and you're at 11.8 months of supply. Holy cow. There's a year of supply in Naples. We got to look into this. The highest foreclosure rates in the country are spiking in a Florida metro. The highest amounts of year-over-year inventory all happen to be in Florida. The highest interest rates, again, that's Florida. Will anyone looking to buy in Florida catch a break anytime soon? Well, I got news for you. All the housing economists that are making lists about, hey, these are the 5 worst places to buy, you shouldn't buy here. I will tell you one thing. The marketplaces I'm going to cover today on a deep dive have some of the most startling changes taking place in those markets in real time. Today, we're going to focus mainly on the Gulf side of the state, where inventory seems to be piling up at endless rates, price drops are hitting at record numbers, and all of this at a time when 80% of Americans say there can't be a worse time to buy a home. Redfin just came out and reported this week that the median home price across all the metros that they manage are at the highest rate on record, 5% up year over year. At the very same time, as we start seeing these sentiment reports saying consumers are done, they seemingly have nowhere to turn, as at the same time, all the rental data that we're looking at across the country is saying that rents are holding firm. And all the economists out there on CNBC and everywhere else pushing for interest rates to collapse to possibly drive those rents up further, it makes no wonder why you have a hawkish tone still coming out of the Fed, highly concerned that if rents don't fall soon, Americans will have trouble making ends meet. But surprise, as luck would have it, guess where rents are actually falling? You guessed it, Sunshine State takes that one again. And while the lack of affordability of almost everything seems to be breaking consumers, I have news for you. There is a massive stall in the marketplace that happened this summer in 2024. And that stall had much higher effects in the Florida metros that I'm going to showcase for you today, because these markets are some of the hardest hit markets in the country, and they are major. And many of you often ask what's going on in Naples, Northport, Florida, Lakeland, all of these metros. You live there, you feel dramatic shifts. If you own a home there now, you're trying to sell one. Today, you're gonna get a crystal clear understanding of where the softest markets are in the state of Florida and what you can expect for the future. And as I dive into the data, dive down below and smash the thumbs up to make sure as many people across the country can get this update as possible.
Change is coming, my fellow Americans. You will own nothing and you will be happy.
All right, everybody, just to give you a start of where we're gonna head, I'm gonna start with some of the minor markets that are starting to flag softening in price, such as Fort Walton Beach, Panama City. And I'm kind of running this on the fly, so I'm not sure exactly what else I'll have time for, but I for sure will cover Northport, Cape Coral, Naples, and Lakeland, okay? But let me show you an overview of Florida. This chart that you see here on screen is year over year price. I think this is last month of data that you're looking at. So this is a 1 month slice of who's actually trending beneath prior year in price points. A very telling graph. You can see Fort Walton Beach, any of these in blue, Northport, Punta Gorda, Cape Coral, these that are completely blue are averaging a majority of their sales below prior year. Obviously, this is an interesting trend because this shows you that people in these areas are actually selling, some are selling far beneath last year, and that these are softening trends. Now, even the rest of the Gulf, even if they're not completely blue, negative, they're barely positive. They're almost like bouncing along. And honestly, if you look at last month, they might have been in the blue. So you actually see an incredible amount of softening in these Gulf side as compared to these bigger areas such as Orlando's up 3.7 year over year, Miami is up 7.1%, but there is changes happening in those markets. But I will tell you, the highest price growth and all that is within the Miami area, and it might be West Palm Beach or Fort Lauderdale. You can see some of those trends always remaining hot when we look at the data month over month. All right, so let's take a scan of Fort Walton Beach. You can see right off the bat, they're down in closed sales. Cash sales are up, as is the percentage of closings that come from cash sales is this year about 1/3 there in that marketplace. Now I want you to jump all the way to the bottom of the graph, and this is where things start to get interesting. Look at this. Active inventory in Fort Walton Beach up 60%. So they had 2,800 homes on the market this time last year. They've got 4,500 homes on the market now. At the same time, there's 18% less buyers, 17% less buyers because pendings are down, which means this keeps happening. But my friends, this right here is not good for Fort Walton Beach. This is a telltale sign that if you go and buy in this marketplace, you have some serious negotiating power. Because look, last year there was a 3.6 month of supply. Right now they're on the door of 7 months of supply. That is a big number, okay? That means that if everybody stops listing homes in Fort Walton Beach, they would take 7 months at the current pace that buyers are buying them. That's really the problem. It may not be such a supply side issue here, but buyers themselves have just bailed. By the way, Sunday 2 weeks ago, I did an entire deep dive on Orlando, Tampa, Miami. If you did not see that, go there and check it out after this video. All right, next up, Pensacola and Ferry Pass. This is the entire metro area for Pensacola. Look, you can see here right off the bat, closings are down, cash sales are down. Cash is a percentage of sales. The mix of cash purchases are actually up. Look at this. Dollar volume in the metro area is down almost 10%. That means the total aggregate of what people are spending in that marketplace is down year over year. You can see out here to the right, this massive sagging line means that there's just been a lot of inventory not being purchased in this market, that they've been down in dollar volume. Now let's take a look at these last 3 graphs where it matters. Look at this. Pending inventory is down 14%. That means buyers are out. Buyers are backing off. Fewer than there were same time last year. At the same time, with fewer buyers, you have an inventory increase of almost 76% in the Pensacola metro area, which has precipitated to a 100%, a doubling, my friends, in Pensacola in the months of supply from 2.2 to 4.4. Now, this gives you kind of a point of contrast to Fort Walton Beach. You go to Fort Walton Beach, they have nearly a 7-month supply. 4.4 may not be bad, but it might be. It might be the highest number that has ever been posted in Pensacola. Look at the graph right here. This is a 1-year run, by the way, for months of supply. You can see Pensacola is just literally going north. And more than likely, anybody that's affluent in Pensacola, that they can wait to sell their house, they've pulled back. This market continuing on this pace, you are going to see record price reductions. You're going to see a shift in home prices in this market going in the fall. Big time. This and Fort Walton Beach. Next up, we have the Punta Gorda Metropolitan Statistical Area. And just a heads up for those waiting for Naples, for Cape Coral, I'm going to do a much deeper dive on the data. We're actually going to look at a bunch of different charts. This is just my effort in making sure people that have tuned in to see what's going on in the Gulf markets, if they're in these particular areas, they don't feel overlooked. All right, right up front, Punta Gorda's closed sales is up almost 17%, which is good news because I believe they've had a massive amount of inventory to absorb. Their cash sales are up 13.5%. Median sale price is falling 2.1%. That's something that we saw on that other chart that I showed you on the opener. And again, total dollar volume in Punta Gorda is up 12%. So that's good news. Now, bottom of the chart, you're going to see down here that this is not good news. So even though closed sales in Punta Gorda, we obviously see at the top of the chart, we had about a 17% increase over prior year, which is good. That means that earlier this year, there wasn't a problem having pending sales. Pending sales is the future indicator of what? Of how many homes we're going to close about 2 months from now. So when you see pending sales are now falling, that's a sign that Punta Gorda is going to have problems with their closed sale ratios going in the future. So in the fall, this is going to soften and the numbers are going to get worse in all likelihood because you just don't have a consistent number of buyers. At the same time, look at your active inventory in Punta Gorda. Punta Gorda had a decent number last year, and that 2,193 units they had available unsold inventory went up to 4,382 units. They're up almost 100% year over year. Months of supply, highest we've seen on this video so far, up 76%. Punta Gorda, who already had a very high month of supply last year, those of you that are in Punta Gorda, drop in the comments and tell me how it feels. I'm sure if you're selling a house there, you have to be on the mark with the price because you have a lot of competition in this marketplace. All right, my friends, we are going to shuffle the deck and head to one of our first major markets for Florida, I would say. This is Naples, Florida, that we have up on the screen. Let's take a look at how Naples is doing. You can see closed sales down 8%, cash sales down 8%. Cash, by the way, is a very important part of this particular market. Look at this. The percentage of closed sales that comes from cash in Naples is 60%. So on one hand, you do have a very low impact of high mortgage rates, I would think, in this particular market. So this will actually be a fantastic test to see how this market does in the future of where we're heading. But look at this. Median sale price is up 6.4% at this point. You can see if you look at this 1-year chart that the price in this marketplace is on a steady climb because cash is king and they're going to buy what they want to buy. I guess they don't care. You have dollar volume in Naples virtually unchanged. It's down almost 3%. right at 1.3 billion in production. Median time to get your home under contract is 53 days in Naples right now. That is up 36% year over year. New pending sales, we'll scoot down here, is up 11%. You have more people comfortably deciding it's time to list their home. But folks, look at pendings. What in the world? So we have this situation all across Florida where buyers have just pulled back. Pendings are down. Inventory stacking up. This is insane. Their pending inventory is actually coming off the floor. We're going to dive into this. Those of you that are in Naples, I'm not going to do a quick run by and disappear. We're going to look at how it is that you have a 167% year over year increase. You had 3,500 listings last year, and now there is 9,400 listings, and you're at 11.8 months of supply. Holy cow. There's a year of supply in Naples. We got to look into this. On the left side, by the way, so you see all the charts I'm about to show you, I like to look back in history. I like to see how these marketplaces, the next 3 markets we look at, we're going to look deeper. We're going to see, hey, is this statistically very low level of inventory, or is it a high level of inventory? In history, have these metropolitan areas been able to withstand the volume of what's changing? Okay, so we want to look at history because we just look at things now and we go, oh my God, the numbers are higher. Is it higher based on that's just the normal? Like, is it back to the way it was in 19 or 2018, things of that nature? So here we go, look at this. You can see on the left side of the graph that Naples has a huge spike in new listing volume in January. Almost 2,000 listings hit the market that single month, and then it stays elevated. You can see every year, it looks like it has a spring spike every year. So January 19, okay, that was the year before the whole country turned into chaos with COVID. But the prior year to that, 2,000 homes hit the market. Boom, January, 1,850 homes hit the market. And then all of a sudden, it looks like it recedes going into the spring, which is exactly what happened here. However, this was last year, folks. All last year, you see how all this activity is way down here? Like, you put a big circle over this. A lot of the history of this metro area really spends a lot of time between 1,000 and 1,500 units hitting the market at any one given time. This really stayed under 1,000 even for a very long run in 2023, okay? But look at this down here, okay? This is the last 6 months of new inventory hitting the market. January, up almost 30%. February, more inventory, up 27%, 9%, 18%, 10%. So every single month so far, sellers are like, it's time. I'm putting it out there. We're going to sell the house. And herein lies the problem, folks. Look at the closed sales in history. So here again, a lot of time in the history of Naples market, going back to 2012, it's really hovered under and above the 1,000 unit mark, okay? Just under 1,000 units, just over. Look how far down that we've had the last 2 years. It's barely above the 500 units per month line. So over time, this is closed sales. When your closed sales is super anemic and all these sellers say, I got to get it sold. It's time. And I'll tell you, Naples is the oldest average age for any marketplace in Florida. This is it. People think it's the Villages. It's not the Villages. It's Naples. Naples is high cash, high retirement. So let's take a look down here year to date. Remember, I just showed you we had massive amounts of new listings coming in the market year to date this year. Look what's happened this year. Are we selling more or less? This is why your marketplace has months of supply shooting through the roof. Closings in January, down 6%. Closings in Feb, down 1.6%. Closings in March, down 10%. April, ding, ding, we're finally up over prior year with a 5% number. In May, we're down 7.7%. Here's what... This is active supply, folks. Is this a chart showing how the SpaceX rocket takes off, or is this inventory in Naples? It is literally straight through the roof. By the way, look at this. Naples, you literally overnight went from 4,000 to 9,000 units. I mean, is there enough cash buyers in the world to absorb all this? By the way, look at the chart here. This is a chart going back to 2012. And by the way, 2012, my friends, you know what that was? That was a return from the glut of inventory of the last great financial collapse. Though this was the returning number of this inventory sitting around in Naples when it was plus 10,000 units. Look where it's at now. Will that have effect on prices? You're gonna have patient sellers. Agents there, I'm sure, are gonna be very careful who they list. It's like, are you really, really committed to selling your house in the marketplace that we are finding ourselves in right now? All right, I'm still in Naples. I'm switching over to Reventure app. I want to show you some more data on exactly how this impact is being felt in this market. Take a look at the top. This is median list price year over year. The year over year growth, this actually shows you what people are putting their houses on the market in Naples. Are they still asking a little more in their area than they were asking last year? Look what you can see. This, my friends, is the zero line. See this line right here? That means home sellers down here for the past 4 to 6 months have been gradually asking less and less and less under prior year. Now, what happens if there's a dramatic shift in all the new listings asking far less than prior year? You guessed it. This is a leading indicator that you are going to have some price transition happening in this market. Now, the interesting thing, listen to me on this, it looks like going back to 2017, a lot of home sellers were in this exact same position. But as you can see right here, folks, look at this. The median ask is 11.3% below prior year. I watched this chart on a lot of metros throughout Florida. This probably is one of the lowest in the state of Florida. And again, if you cut a line all the way back to 2017, there's not a time when this marketplace was asking such a low amount against prior year in the history of this market. As far as the data that I have right here. By the way, just for kicks, look at the state of Florida, my friends. These in blue are marketplaces that in real time right now are asking less than prior year. I could click on any of these markets. You will not see them this low at any point going back to 2017. You think we're gonna have an interesting fall season? You guessed it. By the way, just for kicks on these marketplaces I already did, Pensacola is down almost 5% year over year. Fort Walton Beach, which remember had like 7 months of supply, is now asking almost 11% under prior year. Panama City, I don't remember covering, but they're down 2% as well. You can see all of the Florida markets except for this one little rural area, which I've never even heard of, and probably sells 10 homes a month, is up 16% because that's the only thing all these people can afford. They're moving there and buying a mobile home probably. All right, I'm gonna jump north. I'm gonna go over the top of Cape Coral up to Northport, Sarasota, Bradenton, and then Cape Coral's coming next. And make sure you stay tuned. I got some interesting things to talk about with Lakeland. Major changes going on there. Look at this. You have closed sales down 2%. In Sarasota, cash sales down 7%. Cash as a percentage closing down almost 5%. By the way, cash sales there, look at that, 45%. Not a surprise. Sarasota, also another retirement mecca. A lot of people bringing their cash and parking it there. Average price down, median price unchanged. You can see it's just kind of bumping along in the chart here. Less buying though. You have kind of even price point, but because you have less closings, you have less dollar volume transacted overall. Not a surprise. Median time to contract in Sarasota, get patient. You are up nearly 70% at almost 50 days before you can see a contract, whereas it was less than a month the same time last year. And that's because you have more new listings, you have less buyers. As a result, you have unsold inventory at 80%. So Sarasota, you are still trending over the state of Florida in terms of an index. There was 5,400 units there last year. There's almost 10,000 right now. And months of supply in Sarasota is now at 5.2 months. Again, that's also well over the state average. They were at 3 months of supply last year. Not gonna spend too much more time on this one, but let me show you what's going on here. Most of the time, they're around the 1,500 mark. It looks like there's been a lot of new listing activity there recently. So they spent a few months north of 2,000 units, and then they're actually really close to the line still. And again, just like a lot of the rest of Florida, you have the same situation going on for whatever reason. Sellers in 2024 said, we have to get the let out and sell this house. It is time. Look at this. January, 36% more sellers. That's like 700 houses when you consider that number. February, 42% more. March was really flat. April up 17%. May up 19%. Now on screen, I am showing you active inventory. Again, going all the way back to 2012, you can see when it was recovering from the last crash. And honestly, pre-2017, they really weren't at 5,000 units. But I would tell you right into COVID, they did. They obviously stayed right in this marketplace. And right now, they're on the higher end of that range. I will tell you right now in Sarasota, the unfortunate thing with this marketplace, your pendings are down. Your pendings will probably remain down because there's a lot of sticker shock in the market. What will yet to be seen, if they keep pumping new listings, if your sellers keep bringing inventory to the market, if the buyers stay bashful, and they likely will until price is correct, you are going to see this shoot to numbers this market has not seen for 10 plus years. The other thing I'll point out is I did take a peek This is a normal balance of inventory between buyers and sellers in the history of the market. So I didn't pull up months of supply, but I'm saying that the amount of supply and choice buyers have based on how many there are, you're at the very top of that number. You're as high now as you've ever seen it. And you're not often in this number that you're at now. So look at Northport, Sarasota here. This is median list price year over year. So again, when the marketplace starts falling below zero, that means this stretch of time, sellers were consistently bringing price down against prior year. That has a softening effect on price. I'll show you that here in a second. But you can see right now, they are at one of the lowest year over year runs that they've had in this entire transition, which for this marketplace really kind of started back here in 2022. Now, ultimately, what has this done to median price? Well, if you step back and look at this graph, because this is 12 years of data, you can see that largely once they hit this peak here in October of 2022, they've really stayed right at or under $500,000 median. So again, 542, and then at most, you're starting to see them bring down about a $50,000 drop. It represents about 10% shift from the top, which tells me if I'm aggressive, if I find something that needs sweat equity, got some room to make a deal, because obviously these homes are not selling against all-time highs. And again, median here is still bouncing around. We'll have to see. Right now, they are punching near very high level of unsold inventory. And if that new listing volume again keeps up, you're going to be shopping. You're going to be shopping for deals in the Sarasota market. All right, my friends, we're pulling up Cape Coral, Fort Myers, median price. I like to watch this market because, my friends, this market was the reigning champ for Florida in the great financial collapse. When the bubble popped in 2007-ish, going into 8, this market lost nearly 70% of its value, is in the low to mid 60% range, and it was one of the fastest falling markets in the country. And this is not a prediction of what's happening right now, but I will tell you, look at this. You had it peak for 2 months in the middle of 2022, right at 470,000. And again, this is median sale price. So before you go in the comments and say, well, Jared, this is going to swing back and forth based on, low end pricings, based on high value homes transitioning on a given month. No, this is the middle. This is the median. This is the safest assessment of how price is doing in the area. You can see that it's spending a lot of time around the $400,000 mark lately, okay? Which again, when you peaked at 470, that's people buying homes in this market around 15% off of market highs in some areas. And I would imagine there's some markets where people are giving back even more, and there's some where people don't have to give as much because the markets in maybe more favorable areas aren't shifting so much. But take a look at year-to-date median price. Down 4%, down 6%, down 4.3, down 3, down 6.7. Again, you can see last year it was correcting, and this year it's not actually holding against prior year. Let's find out why. Again, this is a chart of new listings for all Cape Coral, Fort Myers, metropolitan statistical area. What you're going to see right here, folks, January of this year, this is a 14-year chart. This was the highest amount of new listings being dumped in the market on a market that already had a lot of listings. You can go down here at the bottom. You can see that January represented a 30%. Forgive me for rounding up. You'll see me highlight this and say, it's up 30%. It's 28.4%. This means that there was somewhere around 1,300 homes in the market last year, which was a decent jump over the prior year in 23. But in 24, we went to 2,200 homes. And then again in February, up almost 31%, dead flat in March. Weird, right? How many markets do we see were dead flat in new listings in March? April was up 13% and May was up 2.6%. Now, as a result, all of those new listings, this, my friends, again, is not a chart of SpaceX and how the rockets take off over there. This would be Cape Coral, Fort Myers, active, unsold inventory, which month after month is going in one single direction, which, by the way, for the first time on this video, we have an active inventory supply that is highest on recorded record going back to January 2012, which again, this was a recovery mark when we were coming from all-time highs. Look at what this market is used to handling, 6,000 listings. And right now they are at 8,150 units of unsold inventory. Wow, oh wow. Here, my friends, is months of supply. This is how long it takes to sell all listings, pace of how slowly current buyers are penning properties. This is the single one driver to tell you how bad your home value is going to get in your marketplace. It's 7 months, 7.1 to be specific. The highest you have on record going back to 2012 was 7.3 in February. And we are a month away. My friends, I shoot this video and 9 days from now, I'm gonna have new data for the following month, and we might see Cape Coral Fort Myers break through to the slowest, most buyer strengthened area of all Florida. And what are we to take from this? If this was the beacon of understanding for the great financial collapse, if we would have known coming in 2007, 2008, that Cape Coral will be the flagship indicator when things are going an incredibly bad way, what are we to take from this update? I mean, this is absolutely incredible. What's funny is I have people dropping in the comments in the Southwest in this marketplace telling me, no, don't believe the data. It's not really like that. There's not too many homes for sale and they all sell really, really fast. All right, let's see what we can expect from the fall price-wise by pulling this chart. Median list price year over year. Look at Cape Coral. Looks like it's actually bounced off of a floor, but it still shows down here that sellers for the last 3 to 4 months have been pricing at lowest levels against prior years. Sellers are consistently 4-5% beneath what they would have asked a year prior. And my friends, why does this happen? Well, you know what happens? You sit down before you put your house in the market and you look at what's available in your area. And all of a sudden you're trying to position how your house looks to be the prettiest in the bunch. And then you have to price against what the others are currently asking. And this again tells us that things are still in correction. Things are still not there yet. There's decline, it's loose, there's slack. The buyers are saying, bring it down or I can't get in. And ultimately, that's gonna continue until affordability returns. All right, my friends, as I pull in the last marketplace, we gotta talk about foreclosures because Lakeland, Florida is the star of the latest report that actually was largely rosy for most of the country. Foreclosure activity in the first half 2024 is down from previous year. You can see down here that filings have continued slipping from the great financial collapse all the way into 2019, where it started to pick back up, and it's just modestly in range of where things were. It's actually lower than last year. As you can guess, we can't go in a foreclosure report and actually skip Florida. We have to make news on things like this, so let's just get it out of the way. The article goes on to report that states with the highest foreclosure rates in the first half of 2024 were New Jersey, Illinois, and Florida, followed by Nevada and South Carolina. All right, the usual suspects, they're all very, very close in percentages to one another, but those were the leaders across the country. Now, further down, look at this. Let's go in. What we're looking at today across Florida is metropolitan area. Highest metro foreclosure rates are in Lakeland, Columbia, and Atlantic City. So listen to this. Among 224 metropolitan statistical areas with a population of at least 200,000, those with the highest foreclosure rates in the first half of 2024 were, ding, 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 Lakeland, which is about 30% higher than our state trend, by the way. It was 0.32% of housing units face a foreclosure filing. Oh, by the way, further down, other areas with highest foreclosure rankings in the top 10 were Jacksonville, Florida, with 0.25% of housing units with a foreclosure filing. I will point out Lakeland here as we jump in. This is a 12-year chart of median price. Lakeland was also one of the top markets in the country in the great financial collapse, where this marketplace saw close to 50% of its loss in price between the years of 2007 and 2012. Look at this. So we had a peak price right here, mid 2022, just like everybody else in the country. This is when the brakes got slammed on the nearly free mortgage money that we had going out. This is $349,000. Right now you can see that it's bumping along around $15,000, $20,000 less. So there's not a massive shift in price, and it looks like it's bumping flat. So let's see what's going on in inventory here. You can see here in history of this marketplace coming into February, look where the market was. It was around the 1,000 unit mark, maybe towards 1,200, something like that. And this again, this is 2019. This is before a lot of monetary policy changes that would come a year later for COVID. But look at this. Look where it spent time when the interest rates were really low. Everything sped up. There was a ton of trading, a ton of listings in the market. And as you can see, as of late, when the interest rates went to 7%, people in Lakeland contracted and pulled back and stopped listing. This is kind of different than what we saw in other marketplaces, but that time has ended. So every month now, for the past 3 out of 4 months, you have numbers of listings being pushed into the market that Lakeland has not seen for up to 3 years. You didn't have numbers back here since 2022. And now this was an epic number, and this is an epic number that we're hitting now, because look, these numbers that you're seeing being pushed in the market for new listings has never been seen prior to COVID, okay? So as I look at this market, what I see right now, and this is important for investors, if you're looking to flip real estate, you have to understand there was supply that was buried right here. There's people that just were patient and for whatever reason stayed out of the market. The foreclosure indicator is interesting, folks, because that could be what you're seeing here. You have a lot of folks who are now behind on their payments, or they're getting in high water in terms of delinquency is catching up to them. They're seriously falling behind on payments. They're in a concern now where they're like, if I don't put my house in the market, I might lose my equity in foreclosure. So you have a lot of people that maybe were just biding time back here. The time has come. They cannot keep it. Now, the real interesting fact is, are there people who can take it off their hands with price in the area staying on the flat line, right? Price softened a little, but it seems like it's maintained itself. This is going to be the biggest test for Lakeland going into the fall this year. The biggest test with high interest rates at any point. Remember all the markets we've seen so far? You remember how many markets were 20, 30% up in January? Some of them were record Januaries. Look at Lakeland. They were only up 9%. And you can see going backwards in 2023, people were holding their house off the market. You can't see my screen. Let me show you. Look down here. August, they were down 18, down 19. People back last year were holding on to selling their house. They were just like, oh, I'm not putting it out there. But whatever has happened, the levee has broken. And now you're up 32% in February. You're up 15% in March, which was a big number, and up 24% in April. And again, May, unrelenting, okay? So let's see, are these going under contract and are they closing? And is it affecting a very big leap in active supply? Oh, no good. All right, look at this. This is pending inventory, my friends. Okay, at the same time, you have a deluge of inventory, and coming out of December, there was a little bit of interest in the market, but it petered out going into May. May, by the way, was the lowest amount of pending home sales on record, according to NAR in the US. It was an absolute bloodbath in the middle of summer. Buyers are like, I'm out. But at this same point in time, remember, you had a couple months here where you're up 15% in new listings, you're up 30% in new listings, you're up 25%. And then all of a sudden you are breaking down against last year. So May down 10%, April down 1%, March down 4%, February down 4%. What's going on? You see it. A lot of new listings and less buyers. This means less buyers. All of this, 10% less buyers, 1% less. This is how you look at a pending chart. You have more inventory, and all I expect, I haven't even pulled the chart yet, we're going to see active inventory and months of supply going through the roof in Lakeland. Lakeland, you're changing in real time. If you are selling your home later this year, be prepared. Boom! Look at Lakeland, okay? So Lakeland took off. You had all this inventory surging when they raised interest rates. But remember what happened? People backed up. So here we came in early 2023. There was normal amounts of inventory. Look at history. In 2018, 2019, people are used to having 2,500 homes to choose from in Lakeland. Okay, well, you had more than that, even last year, okay? But now Lakeland, like Cape Coral, is sitting at 4,300 homes. The highest on record, going back to the end of the Great Financial Collapse, is 4,083 units. You are 300 units above. You're at an all-time high. You broke through that in April. It'll be interesting to see what the June numbers look like, because unsold inventory is absolutely stacking up. It is highest in Lakeland on record. If you are buying in Lakeland, know this. If you are selling in Lakeland, know this. And here we have months of supply. Take a look at this. 4.1 months of supply. So that's up 70% year over year. Look for that to keep going higher. And look, you haven't seen 4 months of supply in this marketplace since 2016. Barack Obama was president. That's how long it's been since the market has been this slow. So what you have right now is you have sellers and you have realtors that haven't felt this dynamic in a very, very long time. Those that are prepared for it, you'll be fine. Just deal with it. Your home prices haven't adjusted greatly. So if you're going to take a little less than you expect, do it, but be next to get out in a market like this. Don't do a 6-month time on market plan and be like, I'm going to be out here forever and maybe someone will pay my price. Not a good plan in a market that's shifting like this. All right, here we have Lakeland Metropolitan Statistical Area. This is the median asking price. So people are asking against last year. And you can see in the little graph on the left, this graph provided by Reventure app, provided by Nick Gurley over there at Reventure Consulting. Thank you, Nick, for all you do. You can see it's 31 is the home forecast. Balanced markets in the middle. Seller, strong market, rising price would be over here on the right. Price down, 31, 31. Again, this isn't anything official. This is like a Nick creation. That's low. Like 31 is low. Like you don't see this a lot. And you can see the bloodbath is taking place in pricing year over year in this marketplace. It is absolutely collapsed. And I look at this chart, y'all, and I see a seller that's behind the curve. You can see it's climbing here at the end of 2023. And all of a sudden the seller's like, oh no, go back down. So what happened is going into the new year, you had people pricing up in Lakeland, like asking whatever they could. And I think we're at the end of this phase where people at the end of 23 in Lakeland, you probably did okay if you sold there, but you have now what is showing to be a future of softening prices. And again, there was a huge year over year correction whenever the interest rates changed. See this? The zero lines right here going down here. This means that people were asking less and less and less against the year prior. But look what the year prior was. They were huge. So you expected to drop here. And my prediction, you're going to have August, September, October. This line can only go down even further for serious sellers, okay? And when you have a marketplace where foreclosures and the delinquency is highest on record, my friends, you have motivated sellers in the mix. And those people are not going to play around. They will not have the time to do that. And so here's what's going to happen. You're going to see that stagnant median price that's been holding around 330. I expect by the fall, you will see that start to take some dips. It will be interesting to see how the market holds and how much unsold inventory and how high those numbers climb as we go into the fall. My friends, if you listen this far, do me a huge favor, smash the thumbs up. If you like more content, being updated on what's going on in the real estate world, particularly in the context of Florida, make sure you subscribe to my channel and do me a huge, huge favor because I listen to you and I read the comments. Drop down below and tell me where you want an update next. It can be anywhere in the country, but predominantly I spend most of my time in Florida. However, I wouldn't rule out somewhere else. Drop down below. Let me know if you say, hey, I appreciate this look. Let me know. I will tell you I have more tools for Florida than I do for other parts. A lot of the data you saw on screen today is only available to realtors. It's a lockout access that we have to the back end directly into the realtors board data. But I will be more than willing to look at other markets and share my thoughts. One last thing, if you're interested in deep dive data research throughout Orlando, Florida, be sure to check out my channel, Jared Jones Orlando Living. There you will find market by market recent updates on the key markets around this Central Florida metro in Orlando. I don't put those on this channel, I put them on a separate one. If that's of interest to you too, go there, subscribe to the channel. You'll get ongoing updates there. Thanks for watching. We'll see you on the next one.